And of course, I've got to turn to Dennis Gartman over at the Gartman Letter. Dennis, you're out there, right?
I'm out here.
You saw this crazy day here. You saw the euro drop to levels that we thought it might hit, but not in such a quick manner.
Right.
Are you moving up your timeline in terms of the euro reaching parity or perhaps the demise of the eurozone?
Well, I think the eurozone is going through the process of its own demise. It's going to take time. This is not something that's going to happen by Tuesday of next week. This is something that's going to take several years because it took several years to put the process together. But what you're seeing is, I think, the beginning game of the end of the euro over time. I think the only way that Greece has out of this, we heard it from somebody else earlier, was to literally either be forced out of the EMU or remove themselves from the EMU and re-enter the drachma, go ahead and devalue it. That's their only way out. Beeks made a very good point a few minutes ago, however. I think what was going on in the foreign exchange market was precipitated the movement downward in stock prices because currencies were moving violently, much more violently than I've seen in 30-some years of doing this in one day. And when that happened, it started to touch off stops. Then you got the fat finger.
Yeah, the infamous fat finger. So, Dennis, are there trades that you'll be putting on tomorrow? I mean, we had the CEO of the NYSE come on the closing bell 4 o'clock show with Maria saying that tomorrow morning is going to look ugly. At this point, what do you do as a trader tomorrow morning?
Get small, be less involved, go to the sidelines. I've been telling people, if you're going to be involved in the market, be equally spread long versus short and get smaller. It's May. The old aphorism, sell in May and go away, still makes sense. This is what's happening right now. And with the volatility, Guy is absolutely right. With the volatility that's occurred and with the circumstances that prevail today, the public's propensity to step up and be a buyer has been reduced, if not to nil. Certainly it's been reduced materially.
You know, Dennis, let's just bring it back to fundamentals for 1 second. This equity recovery has been based on earnings going up, which may or may not continue as a result. This won't impact companies' earnings. But the capital markets and the fluidity of the capital markets, the fact that IPOs were coming back, CEOs were confident again about doing M&A.
Sure.
You got to believe that what's happened in the last week, and certainly in Europe, is going to impact that aspect of the fundamental recovery we've seen, right?
No question. The propensity for somebody to step up and take and to move forward with an IPO or to move forward with a merger and acquisition after what they've seen in the last 48 hours has got to be reduced. That's going to drain liquidity. That's exactly what's going on. We want to think all the time that the markets are logical, that they respond only to earnings, and people have to understand that markets are psychological. They respond to people's psychology, and the psychology has been damaged rather materially here, I'm afraid.
And Dennis, kudos to you, on this gold trade. Well done. But today, for the first time, at least, maybe I haven't been watching closely enough, but today money was coming out of the euro. It was pouring into the gold market today. So today might be the day that gold actually became a currency, although everybody's been saying that it should have been. Today might actually be that day.
Well, I think that's what you're seeing. If you're a reserve manager, if you're at the Reserve Bank of India or the Reserve Bank of Indonesia, and you own a large amount of euros, what's your propensity to step up and buy more? Seeing what's going on in Greece. Instead, you're looking elsewhere. You may go to the dollar, but you're really not enamored of that. You don't really want to go to yen, but they ran there. They're running to gold. Be careful, however, with gold. This got to be panicky this afternoon. The margin clerks in the next couple of days are going to look around to say, what do we have to sell that we can meet margins with? Gold may well be that place that they do a little bit of selling.
All right, Dennis, thanks so much for joining us on this very important day. Dennis Gartman of the Gartman Letter. You know, Dennis said as a trader he would get small. You guys actually stepped in and bought some things because we did see some pretty hefty drops in the markets. Karen, both of you stepped in and bought Hewlett-Packard. I thought that was interesting.
Yes, given how we look at the world somewhat differently, I think for us...
Just 2 minutes and you're...